Hello, everybody, and thank you for joining me today. It's Alan Barry Labucan, and we've got another of our CEO interviews. And today I've got a company called Galantas. GAL is their stock symbol. What they've got going is a project in Ireland. And I've only ever covered one company in Ireland. It was Dalradian. I started covering it at 25 cents and it was ultimately bought out. So the luck of the Irish has been pretty good to me. And these guys had some news out just recently that caught my attention. That news was that they were doing some underground drilling and some surface drilling, and they hit some very nice grades. And so I talked about them on one of the In the News shows. Mario Stifano reached out to me on Twitter to thank me for that coverage. So I invited him onto a show, and here we have Mario Stifano, the CEO of Galantas. Thanks for joining me, Mario.
Well, thanks for inviting me. Look, I'm really happy that you covered us. And, as you highlighted, we think we have a great and outstanding project in Northern Ireland. You must have been one of the early followers of Dalradian, which is a great success story. It was bought by Orion, a private equity fund out of New York, for almost $550 million Canadian in 2018. So at much lower gold prices than we are today, it's a world-class asset. When Orion bought Dalradian, my understanding was they had over 6 million ounces. They continue to drill, and what we hear is significantly more ounces than what they had in 2018. So definitely a world-class asset. And we're only about 25 miles away from Dalradian on the exact same trend, exact same structure. These major faults, and I'm not a geologist for those that know me, these major faults, and this was news to me because I had no idea that Newfoundland and Ireland, and the island of Ireland, all the way into Scotland, were one big landmass. And these major faults now run from Newfoundland all the way to Ireland and Northern Ireland and into Scotland. And you now have some significant discoveries on these faults that really weren't explored in the past. So Dalradian was the very first one, which is now a world-class asset. As I mentioned, we're 25 miles away. And then looking into Newfoundland with Newfound Gold and their Queensway project, another potential world-class asset that Eric Sprott has put tremendous money into. I think it's got to be at least now 100 million based on all this.
Well, I just put
past finances. Yeah, exactly.
48 million in the other day. I talked about it. Yes.
Yeah, exactly. Exactly. So it must be over 100 million that he's put into the various placements with the flow throughs that I've noticed. And Eric Sprott is our second largest shareholder at Galantas. And I think the reason for that is the recognition that there's potential for multiple world-class assets on these major faults. And I've mentioned it many times, when Newfound Gold went public and you look at their presentation, they always talk about Dalradian rocks and Dalradian and what they felt was in Newfoundland. And now I'm trying to remind everyone that really this all started in Northern Ireland and what you've invested in. So you're a pioneer in this, I guess, Alan. So I want to remind everyone that Galantas has exact same geology, exact same potential. But what distinguishes us, I think, from all the other juniors, because we just noticed as well, and you mentioned just a few seconds ago that Eric Sprott put in another $48 million into Newfound Gold, which is great. It's supportive, but the junior market is tough at times, and we're always hoping we're financing at higher and higher prices, but the world doesn't always work that way. So I think what's going to be different with Galantas is because of the significant amount of work and effort that was done to get this project permitted, get it ready for production, and we're months away from getting production out of Galantas, and we're financed. We raised $8 million in May. The goal now for Galantas and our shareholders will be to use the cash flow from production to reinvest back into exploration. So we are no longer going to dilute our existing shareholders. And just as importantly, if anyone buys Galantas in the market, they're not going to have to worry about, 2 weeks later after a good drill hole that we're going to raise $5-10 million and dilute them down. And I think that should give shareholders, quite a bit of comfort that we're well financed. And if we execute on our plan, we won't need to raise additional capital. And, if a scenario comes that we need to raise additional capital, I really hope that's not going to be the case. But the first call I'm ever going to make is to Mel Court and Mike Gentile and Eric Sprott, and ask them to exercise their warrants, which are existing. They're at 40 cents. And if they get exercised, that brings in another 11 million. So again, even in a scenario where we need capital, and I hope that's not the case, I'm hoping it's going to come from the existing capital structure. So again, anyone buying in the market today doesn't have to fear that we're going to have to do a capital raise in the coming months.
Gotcha. So, what makes these kind of projects very exciting uh, and challenging is that these faults are crustal faults, so they go very, very deep.
Yep.
And what those faults create is a weakness in the rock that allows the fluids that contain the gold to come up those faults. And they're like the plumbing system or the conduit to that. And as they get close to surface, oftentimes there's cross faults. Okay. And so what makes it challenging is it's complex faulting that goes to this high grade mineralization. These fluids make their way up the conduit, then they kind of spread out. And so, for example, one of the most famous ones right now is the Fosterville mine, their Swan Zone. But that project was in production for 20 years before they went, because one time I heard a friend of mine, I talked to a geologist friend from back east, and he said, back then, well, the problem with Newfoundland is that there's lots of high grade gold, but nobody's ever had it hang together. Now Newfound Gold has changed that, but the reason that it's hard to hang together is because of this complex faulting. So complex is actually good in this case. Those deep faults are very good in this case. And as you said, those faults, when Ireland and that part of Europe were connected to North America, that same fault that goes through what's got everybody excited in Newfoundland also extends up into Ireland. And that's why they've been talking about that. I think they probably talk more about the Swan Zone now in Fosterville, but that really made Kirkland Lake into a massive winner. So, you know, I'm really paying attention to what's happening in Newfoundland. And, you know, I had good success in the past with spotting. Well, what made me figure out Dalradian was Patrick Anderson ran the company, and he had made a good big discovery with Aurelian.
Of course.
And even before he made that discovery with Aurelian, he was involved in diamonds. And I had a long history of diamond exploration in my career. And so all of these signals started coming up, and that's what I think I'm finding with you guys. And now what makes it quite interesting for you guys, different than the Newfound Gold stories, is they're all drilling from the surface to catch these veins and these pods of super high grade. You guys have underground ability to drill from underground, making it a lot easier and a lot cheaper to catch these kind of systems.
Exactly. And again, I'm not a geologist, but so I look at things a little bit more on a macro level. And when I looked at Dalradian, I did talk to Patrick Anderson before I took on the role. And if you notice on our advisory board, Tim Worman is one of our advisors. I'm really lucky to have him. Tony McCooch from obviously Kirkland Lake is one of our advisors. So I'm really lucky to have some extraordinarily smart people around us. But what really, when you looked at Dalradian, and I don't know how many veins they have now, but when they put the resource together, and it's north of 6 million, we know that for a fact, there was 26 veins. And it wasn't until Dalradian started, you know, drilling a little bit deeper, they started getting some better grades and better widths. But these veins do hold together. And when you look at Galantas, you know, we've identified 16 veins to date. Really 8 have only been drilled, and only 2 have really been drilled with 20,000 meters. And the rest of the, you know, 3,000 to 4,000 meters have been drilled at the remaining veins. So very sporadically drilled, but we are finding a number of veins here. And to your point from the underground drilling, number one, our costs are going to be lower. I'm a finance guy, so anything that keeps us efficient is going to be beneficial. But veins that we are able to identify that can be accessed by additional drifting. For example, Joshua, we're drilling from surface, but it's only about 200 meters away from the underground workings. So once we get a little bit more confident on Joshua, we're just going to drift over. There's targets to the north of the Kearney vein where the majority of the development is currently. Again, about 150 meters away, there's a target that Rio Tinto identified in the 80s from surface auger drilling. They call it Panjar drilling, but really it was just to get to the hard rock overburden. And same thing, we're going to do a bit of drilling there at some point, and then maybe drift from underground and start drilling from underground once we prove that there's additional targets. But when you look at Galantas, and even Dalradian for that fact, but it's a private company. But when you look at Galantas, I think the one additional differentiating feature for us, apart from getting ready to go in production and hopefully generating cash flow to reinvest in exploration, is we have a massive land package. So because we're effectively the first movers in Northern Ireland, we don't have 30 juniors competing against these various faults. We locked it up between ourselves and Dalradian, and I think that's going to be a big value add if you take a big picture and you think 3, 5, 10 years out, because whether it's Newfound Gold or Labrador or any of the other companies in Newfoundland, at some point they're going to consolidate. And you look at the big camps of the world, whether it's Timmins, Kirkland Lake, Val-d'Or, a lot of these companies are always competing against juniors. So you were never able to really get the full synergies of controlling a camp. We're going to control it between ourselves and Dalradian, and two companies that are focused on high grade gold. We're both going to be producing a concentrate. So we're fully permitted. We are producing a concentrate and shipping that out into Europe. Ocean Partners as our offtake agreement. They're great supporters. They participate in the last financing. But Dalradian in their permitting process as well has decided to produce a concentrate, which again provides overall synergies in the district, which I think is going to be beneficial for shareholders in the long run.
Well, you brought up a good point there, and that was about the drifting. I live in Mexico, a place called Zacatecas, and there's a famous mine that's called Milagros, miracle in Spanish, and they had two veins that came to surface, and then they drifted between those two veins and to connect them underground. And when they drifted through, they hit a spectacular vein that was like, if you calculated in today's dollars, it would have been like worth $350,000 a ton kind of rock.
Geez.
So, that's what's
lots of VG in there.
That's what's interesting about these vein systems is sometimes they're found by accident, and or you drill through a vein and then you keep going a little bit and all of a sudden you hit alteration, and okay, well, I can't stop now that I'm in alteration. And you keep going, and that alteration leads you to another vein. That's what these clusters of veins are like. That some can be found by accident. It's pretty exciting that you have one that you're only 200 meters to drift out to it. So that brings up the point. Let's talk a little bit about why you have those underground workings and the history of the project.
Sure. No, that's a great question. So Galantas took a slightly different strategy to Dalradian, and I think this is the key difference between the two companies. Dalradian really focused purely on exploration, and our former CEO, who's still a big shareholder, Roland Phelps, wanted to get this asset in production. He had a small scale mine in Wales, and wanted to get this current project into production. So the company did do a small open pit. Around 30,000 ounces were produced. So a mill is on site. And when the ore was mined out at the open pit, the plan was to transition to underground. So a lot of effort and money was raised to develop the mine from underground. And that's where you're going to get the 2 kilometers of underground development put in place. So again, the project was fully permitted, but an issue arose, and those who understand Northern Ireland could understand the sensitivities around this, but there was an issue that arose around permitting for blasting. It wasn't something that was required in the past, but the Department of Justice was looking for a permit to handle blasting material in Northern Ireland. So as a result of that, the company had to put the mine under care and maintenance in order to get the blasting permit, and that took a couple of years. And Iridium, for example, is talking to us on how to get a blasting permit, just because, again, I don't want to get too much detail, but I'm sure listeners could understand the sensitivities in Northern Ireland around blasting. So that put the company under care and maintenance and put the company under tremendous financial stress. So from 2019, really couldn't raise any money. A lot of the underground workings, even prior to that, in the mine, I'll call it on a shoestring budget. So when we took over in May with the new management team, myself and Brendan Morris and our on-site personnel, we got a new mine manager, geotechnical engineer. A lot of our effort was focused on rehabilitating the underground workings, because unfortunately, when it was put on care and maintenance, a lot of the shotcrete wasn't done, the bolting and screen that should have been put in place, because mines really aren't meant, especially when you drift over to a face, they're not meant to be open for 2 years. So we had to go back and rehabilitate the mine. Then we also had to rehabilitate the equipment. There was a lot of old equipment there. We had to acquire new equipment. We had to get some fans so the mine is properly ventilated. And then we've been spending time, we're still finalizing it now, but we should be done hopefully in the coming weeks, a mine plan, because we wanted to make sure now that we got more information, different gold price environment, that we put in place a real mine plan to get this operation up and running. And one thing that we're going to do is we're going to do this small scale and just ramp up, whether it's every 6 months, 12 months, 18 months, 2 years. We're going to try and internally finance this. And this is going to be really important. Again, I'm going to mention this so many times because, I've almost been handed a gift here when it comes to an exploration company where I'm going to have cash flow. And I've been in exploration. Lakeshore went from exploration to commercial production. We put Timmins into productions, Timmins West, Thunder Creek, which is now still part of Timmins West, Bell Creek. But we're always trying to raise money when we're getting to that phase. When I was CFO of Ivernia,
Mario, earlier you were wondering why you recognized my face.
Yeah.
Lakeshore was one of my picks, and I picked it right before the takeover, and I was on BNN.
Maybe that's where. Okay,
That's where
you
you
looked familiar to me
recognize
when we first connected. So that's great. So I understand the sensitivities around exploration companies having to raise capital. So our plan is to get this up to 200 tons per day. The mill in the past has done 400 tons per day. But what's unique about Galantas is, again, I know you're a geologist, but the ore is very clay. So I guess what I understood is with the thrust and the folding and the crushed breccias, maybe the water, because anyone who's been to Ireland and Northern Ireland, there's a lot of rainfall there. So it's actually a very clayey material. We think as you get deeper, you'll get your traditional quartz vein, but the quartz veins have been crushed. So it jams up the mill. So that's why I'm confident we can do 200 tons per day. I'm not confident we can do 400 tons per day without doing some upgrades, whether it's additional crushing or floats, adding to the flotation circuit. But our plan is to get to 200 tons per day, assess it, then get to maybe 400 tons per day. If I need $500,000, $1 million to invest to upgrade the mill, we'll do that. Get consistent cash flow from there. Then plan to go whether it's 500, 750 tons per day. So I'm going to do this in a very staged, managed approach so we don't have to dilute. And I met some guys from K92 in Papua New Guinea, and they're telling me that's exactly what they did. That's why their share price is at $7.
Well,
they try to
getting
get
back
small
to
scale production and ramp up. Sorry.
Getting back to Fosterville, that's what they did for 20 years until someone drilled deeper.
Yeah.
And that's when they found the Swan Zone. So even though you've had to go through some challenging periods, that challenging period sets the stage for
today.
You guys to potentially have massive success, because one of the big problems with trying to find these small zones of super high grade, we call them jewelry boxes, is that tagging it from surface and then drilling it off from surface so that you know what you have is difficult. But Fosterville and the Swan Zone was much easier because they had all those underground workings that gave them they just had to drill a little bit to tag and follow
Yeah.
those jewelry boxes.
Yeah. And that's exactly it. Like Swan Zone would not have been discovered if it was drilled from surface. I mean, it would have been, or, you know, it would have taken a tremendous amount of luck. But you're right. When you're underground, you start to see things, you start to understand the geology. You're actually seeing it with your eyes. You're not seeing core, you know, 1 or 2 inch diameter. You're seeing the rocks. The geologists get a better sense of the interpretation of what's happening underground. And you know, these veins, and you've alluded to it many times, are going to go down to the bowels of the earth. You know, they're going to be there as deep as we want to drill, and the more we drill, the more likely we are to find more and more gold. You know, we do have 500,000 ounces in all categories. You know, quite a bit is still inferred at over 7 grams in less than 25,000 meters of drilling. So, you know, we created a lot of ounces with very few drill holes. And I think the more we drill, I think we're going to continue to find more and more gold within the existing veins that we discovered. Plus, as you alluded to, you know, these veins that we're going to find as we continue to drill what is known. So our last drill result where we got the 17.7 grams over 2.5 meters, that's actually a new structure right next to the Kearney vein. And it lined up with some other holes that we really couldn't see. But now that we got this third intercept in there, it's clear that this is another stringer vein now. So
Yeah, you see, that's the nature
more we're
of
going to get.
These networks of veins. You drill through them sometimes, you hit alteration, you keep going, you find another one.
Yeah.
And then the
Yeah.
trick is to keep following them down. And,
Yep.
you know, what you're describing there is sort of the way that a lot of mining companies grew into mining companies. They would start a mine, they would have some ounces ahead of them,
Yeah.
and then they would keep drilling to keep the ounces coming in ahead of the mine,
Exactly.
reaching those ounces. So, you know, that's quite an exciting business model you guys are working on. It's how a lot of companies used to be made into mining companies. You're following a path to success that has been followed before.
Yep.
And you have that sex appeal of the you know, orogenic system, that a swarm of veins. You know, there's big mines around you. Dalradian has one, as you said, 20 miles down the road. So it's got, you know, that growth potential of a new miner, plus the potential for banging some holes into jewelry boxes. And then, you know, you can use your cash flow, as you said, to reach those jewelry boxes. But, you know, when you've tagged the kind of gold that you have, those systems, those veins go down a long, long way. For example, in Red Lake, Ontario, they had to go down over 1 kilometer, and then they hit the jewelry boxes. And
Exactly.
that made a Gold Corp at one time the lowest cost producer of gold in the world.
Yep. No, exactly. And you know, when Lakeshore went in production, now that I know you covered and recommended Lakeshore, we appreciate that tremendously. But you know, when we went into production, the most valuable asset in many respects was the Bell Creek Mill, because Lakeshore would not have been Lakeshore, wouldn't have gotten taken out for 1.5 billion by Tahoe without that mill. And the reason for that is that mill allowed the company to start small scale mining. And in the Lakeshore's case, it was 1,000 tons per day. And that was going to come from the Timmins West project. Now, the unfortunate part with Lakeshore, and God, I must have raised $700 million at Lakeshore as CFO. And, you know, whether it was from royalties with Franco-Nevada to traditional equity convertibles. But the difficulty we had at Lakeshore, and Tony would always say it, you know, God put the gold in the ground and we really don't know until we start mining it. And the unfortunate part was when we started mining the veins near surface, the grade was not 8 grams, it was much lower than that. So we had to figure out a way to continue to grow and expand the mill and mine in wider zones and get more tons out of the ground to make it economic, and obviously it was. But that mill was critical for us because it allowed us to start the mining and generate the cash flow and get it financed. When you look at some of these big, massive projects, great discoveries, you know, I'll use copper as an example. You know, you can get a billion, 2 billion ton project, but really you're at the mercy of Rio Tinto or BHP or one of the other majors to buy you out, because no junior could easily raise $5 billion in today's world to develop a mine. It's extraordinarily difficult. Look at what Rio Tinto is having sorry, the
Mongolia.
one in Mongolia. You know, the amount of capital required is significant that juniors can't really do it anymore. So really what you're doing is you're exploring for the big guys to take you out, and on your hands and knees praying that they're going to take you out. In our case, I think the difference is going to be because we're going to be able to generate cash flow. And if you look at one of the slides in our presentation, I try to lay out, you know, we're at a $30 million market cap range. Scott Gold, which is in Scotland, is at $80 million, and they're in production a little bit ahead of us. But because if you factor in our warrants, we got 100 million shares outstanding, and that'll bring in another 11 million. And just to be clear, if those warrants get exercised, as we move up that value chain and not having to issue additional shares. So, for example, if we get to $100 million market cap because we're finding more ounces, we're generating cash flow, you know, very quickly your shares go from, you know, the 40-cent range to $1. And if you move up to the range up to Marathon Gold or Dalradian, which got taken out at 500 million because they found 6 million ounces, if we can get to those levels without diluting, the share price appreciation is significantly levered, not only to the gold price, but to success. And I think that's going to be the key difference, because we're not going to be begging for capital like a lot of the other juniors, because, you know, we are doing it in many respects the old way, which is small scale mining, put your cash back into the ground to develop bigger resources. And really, you know, this gift has been handed to us because of the significant work that Roland and the prior management team put into getting this permitted into production. So our goal now is to really leverage that work to drill and produce cash flow. And people that know Galantas, you know, there were quite a few companies that have tried to acquire Galantas. And Roland Phelps, to his credit, turned them all down because everyone's strategy was to shut everything down and drill, which is the Canadian way. There's no doubt about it. That's the way we do things in Canada. And Roland kept saying, no, I've spent, you know, 10 years trying to get it to this position where we're going to generate cash flow. I don't want this shut down. I don't want all the effort of getting the permits in place to be completely forgotten and having to start over again. So when we came in with Ocean Partners, and by the way, Doré Copper looked at this, and I'm the chairman of Doré Copper. Similar strategy, right? We got a mill that we recognized that no one else did as being the key asset. And this is coming from my Lakeshore days, and using that asset to really look for gold. And, you know, Corner Bay now, for example, is 7 million tons over, which doesn't sound like a lot, but at the grade, it's 1.2 million ounces at over almost 5.5 grams if you use spot prices. So we looked at Galantas with Doré Copper because Ocean Partners is one of our larger shareholders at Doré Copper, and they said, you got to look at this asset. But same kind of scenario, Roland at the time just wasn't ready. He really wanted to try and get into production himself and raise the capital, but a window approached, and Roland, I think, was getting a little bit tired. He's been at it for quite some time. He said, look, now's the time for me to hand it to a new management team. But in order for him to hand over the keys, and he's still a consultant, obviously, and a big shareholder, but in order for him to hand over the keys to a new management team, we pitched him with the idea of, look, we're going to leverage all the great work that you guys have done here, from community relations to the permitting, get this into production and explore. So we're going to do the dual strategy, not just one strategy. And I think you really got that idea.
I really like that game plan, you know, because normally if you're trying to build it to get down there and do it that way, there's a lot of CapEx. You've already got the underground working, so why not extend those? And that's exactly what happened at Fosterville. And you've got that sex appeal to find swan zones down there. So I like your business plan. We're getting a little close on time here. Before I let you go, let's talk a little bit about what you think about gold. I look at the valuations of the stocks out there on Wall Street. They're stretched to historic highs.
Yep.
The cash printing is going through the roof. 40% of the cash that's ever been printed has happened in the last year in the United States.
Yeah.
Debt is through the roof. The Federal Reserve can't raise interest rates even if they wanted to. And now inflation is starting to kick in. So I think we're in a perfect storm for gold to go higher. What do you think?
I agree with you 100%. Almost all my investments are in the precious metal space and base metal space because exactly for that reason, I think we're in a long-term inflationary environment. And I'll give you a couple of examples. I was just in San Diego. So I lived in San Diego for about 5 years. I'm back in Toronto. So I went down for Thanksgiving, Canadian Thanksgiving, and I ordered food from a restaurant that, my son loves this restaurant. It's called Luna Grill. It doesn't really matter, but I ordered it from Uber Eats, end of June to middle part of October. The prices went up 20%. And I'm assuming it's a factor of the oil, and I'm assuming it's a factor of food prices, chicken, obviously, wages, all of it. 20% in 3 months, right? Which is quite tremendous if you really think about inflation. And I'm going to give you one other example about what's happening with inflation. And this is completely out of the blue. It just happened yesterday. My wife is building these let's call it craft. She's doing some crafting, and you need it speckle. It's almost like what you use for fixing drywall.
Right.
And she bought something about 4 months ago for $45. It's a big tub of this stuff so she can do her crafts. She went to go buy it yesterday, and it's $75 at Home Depot, Amazon, within 4 months. I guess it's the shipping backlog. And she said, like, why am I going to buy it? Basically doubled in price for my crafting. She's going to wait and see if it comes down in price. I'm not so sure it's going to come down in price. So even though the Fed is saying it's 5% inflation, my instinct is it's significantly higher than that. In one part of California, I think near Big Sur, which is south of San Francisco, the gas hit $7.50 a gallon. Like that's crazy, right? Right before COVID hit and the downturn of the COVID, it was down to $2.50 a gallon, even in California. So that really will highlight how our pocketbooks are being hit. So our standard of living is going down significantly. People don't realize it yet. They may see that their house prices is going up, but that's all relative.
They do. Your wife did. Her stuff cost 40, 45, went to 75. People notice.
Yeah, no, they do. Exactly. Our standard of living is going down, and people see wealth going up because their house might be going up in Canada or the US or anywhere else, but it's all relative because asset values are going up, but our wages aren't going to be keeping up at 10, 15% increase. I didn't get a 15, 20% increase. I'm not sure about you, but I definitely did not. Right. So we know our wages are all going to get hit. We're going to have to make money on our investments, which is what we're all on this call for. Because we see the value of gold and precious metals and commodities, because I think that's really where the asset values are going to really appreciate in this inflationary environment. And I read somewhere, don't ask me where I read it, but during the oil crisis back in the 70s, and oil went up, I can't remember what it hit back then, $70, $80 a barrel. And I think it was Iran that said the reason why gold went up is because it wasn't because of inflation per se. It was because the devaluation of the Western currencies. So why are they going to sell their oil for $40, $50 a barrel, $20 a barrel back then, when what they could buy with that $20 a barrel has gone down significantly as they get US dollars, right? Because inflation is going up. So of course their oil prices are going to go up. Of course gold prices are going to go up because in order the cost to get out of the ground is going to go up. And the incentive to hold gold in these kind of environments is going to be much higher. Same thing with copper, same thing with all commodities. They're going to continue to go up. And even housing, I think, is going to go up, even if interest rates.
Actually, you make a good point there, Mario, that I think that we're going to go back to what's important, which is because for a long time, there was tremendous efficiencies because of this. You could get a product from China and land it on the door in a matter of days.
Yep.
Now that supply chain is broken because people don't want to work for that kind of money. So what that's going to cause is the building and making of things are going to come back to the domestic production. And when that happens, there's going to be a tremendous amount of need for raw materials. And I really think the Fed is painted into a corner that they can't fight inflation by raising interest rates. You got so much debt, you pump up a 1 or 2% increase, and that slows everything down. the only way they're going to, the only tool they have left is to try to grow their way out of this
Yes.
situation.
Yeah.
And to grow their way out of this situation, one example is with all these electric vehicles, they're going to need to upgrade their ancient electrical system, which is
Yep.
in vast need. So that might be the infrastructure where in the past it was road building. Now it might be rewiring the country
Electrification of the world.
and building things domestically. So if growth, if they can't raise interest rates, that's positive for the price of gold. If
Yeah.
inflation is kicking in, that's positive for the price of gold. But if they try to grow their way out of it, they're going to need a lot of raw materials. So Robert Friedland called it the revenge of the miners.
Yep, exactly,
And
exactly.
I think
And
that's
there's gonna be huge investment in infrastructure to move us into the modern era. But at the same time, you know, your point about not wanting to work for those wages, the reason for that is inflation. And I think I
well, it's
read
twofold.
somewhere,
It's inflation, and the governments are making it so that you don't have to go to work because they're giving you
exactly,
money.
exactly. And the problem, I think the US, and I'm sure this is all over the world, but maybe more highlighted in the United States. And I think China is trying to correct it a little bit based on some of their policies recently. But something like the top 400 wealthiest Americans in the 50s, which I'm sure would have been, you know, old industrialists, oil barons, own something like 20% of the wealth in the United States. Today, the top 400 Americans own 80% of the wealth of the United States. So basically, it's moving to an oligarchy. So you got to think of the Elon Musks, the Zuckerbergs, the Bezos, all the big tech barons rather than oil barons, let's call them tech barons now, really control the vast wealth of the United States. So even though things look like the stock market's going up, you know, the vast majority of Americans really aren't enjoying this increase of overall wealth. Yes, your home prices are going up, but again, if you sell your
And
house,
maybe
you
your
buy another
mutual
house.
funds are going up, but they're
Yeah,
so diversified that,
yeah.
you know, they
Like
hardly keep up with the market.
you know, living in California, I got to tell you, the amount of people that lived hand to mouth, even though they're making, you know, 300
200 grand a year.
it's just no one is really saving a lot of money. I have a friend of mine down there who would make up to, you know, $400,000 US, and he had very little savings. He was doing that for the last, you know, 20 years. And I would scratch my head, but the reason for that is by the time you know, your golf memberships to your Porsches to everything else, great consumption of goods in the United States, but no wealth creation other than your principal home. But again, it's relative, because if you sell your house, unless you go to a much lower cost environment, whether it's Mexico or, you know, some of the Midwest US, you don't really create net wealth. So you know, gold, precious metals, commodities is the place to go. Is you know, I'm seeing it on the macro level,
Revenge of the miners.
right? The revenge of the miners. I'm going to
Yeah.
mention that to Robert. I still chat with Robert because obviously with my Cordoba days, and the revenge of the miners. I'm gonna ask him to, if I can consistently use that in my
Yeah,
presentation.
well, I am.
It's coming, definitely coming. All
Well,
right.
let's wrap it up. You know, I'm really impressed with your business model.
Thank
I'm
you.
really impressed with where you are in Northern Ireland, and that structural story, and the mining your way down to looking for those jewelry boxes. And don't forget, those accidental discoveries can happen. Like I talked to you about Milagros. So
Yeah.
was there anything I didn't ask you that you want to get out there, Mario?
No, I think we covered it all. And you know, I'm happy to do another interview. I'm sure you might get some questions, and I'm always happy to get on this. I love chatting about the project. Look, I'm just a spokesperson. It's really the people on the ground, the geologists, the operators that do the real work. And you know, I've got a great team around me, and I'm really just trying to get the story out there to make people understand, as you just pointed out, that I think we got a great story developing at Galantas. And let's not forget all the history, all the significant effort that's been done to get us to this position. And I'm lucky that I've inherited a lot of this now, that I can help execute what I think is going to be a really strong strategy to create shareholder value.
Well, luck is a product of preparation and good timing. So I
Yeah,
think you've
and the island that we were on, the island of Ireland, somehow generates a lot of luck for people. So
oh, I do. Now I remember. What's pending? Are you guys working on some drilling? Do you have anything in the
yes,
lab? Should we be
yeah,
looking forward to some news?
yeah. We've got we're doing a 4,000 meter drill program. The first two holes have been drilled. We should get some more assays, hopefully in the next 2 to 3 weeks. Another set of drill results. We'll have a mine plan out, hopefully before the end of the year, indicating what we plan to produce over the next 12 months. Um, we should have some results from geophysics. We did there's just so much to talk about here as we're
Well,
recognizing. This is going on longer than I'm sure we've ever done before. But
oh no, I've done hour-long interviews,
oh, okay,
but
okay. I feel bad.
no,
I'm
but
tying you up. No
I
geophysics has been done here, even though there's sulfides since the 80s, right? No one
wow.
has ever run geophysics here. So we did 2 test areas. We'll get those results out. We're processing the data. And then we're probably going to do a much wider area for geophysics here as well. So we can start identifying a number of these targets because no real work has been done on what is likely a significant camp.
Awesome.
Yeah.
Well, it looks like you got a lot of news ahead of you, so we'll definitely do this again. I've really enjoyed the conversation,
Me
Mario.
too.
Thank you for joining us and telling my audience about what you're doing. It's got the all the earmarks of my Dalradian getting in early days and really the Fosterville Swan Zone, mining Fosterville down to open up that jewelry box. So thanks again, Mario, for coming on.
Knock on wood, I just did that. We'll find a few of those jewelry boxes here.
You got the luck of the Irish on your side.
Exactly.
Okay, I'm going to close it off.
All right. Thank you.
There you go, folks. Galantas, following in the footsteps of some, the old mining where you would mine your way to keep drilling ahead of yourself. Following in the footsteps of Dalradian, a big success that I identified very early. Hopefully I'm doing it again here with Galantas, and that Fosterville mine plan, mining your way down and then opening it up some jewelry boxes. And the structural story that has everybody excited over in Newfoundland extends into Ireland. And that's what they're drilling on. That's what they're building. And so that's really a perfect scenario for making a discovery of these high grade, massively profitable kind of deposits. And so the company has 74 million shares out, $31 million valuation. Newfound Gold has $1.5 billion because of what they found. These guys could find something just as spectacular. So there you go. My shows are for information purposes only. It's important to do your homework and speak with your financial advisors before making any investment decisions. And I stress, do your homework. Go to this company's website, check out their information. I think you'll be impressed. Have a great day.
Thank you very much.